regulators and policymakers are increasingly incorporating geopolitical diagnostics into risk management. In summary, geopolitics and finance are deeply connected with conflicts, strategic flights, technological shifts, which influence market stability, capital flows, and investment patterns. Understanding these dynamics is essential to managing systemic risk and navigating the increasingly fragmented global financial landscape. In other words, geopolitical tensions are increasingly shaping global financial markets, influencing capital flows, investment patterns, and systematic stability. That's what we are facing right now, and that's something that we need to better understand. What is the connection? What is the different factors that affected especially the stock markets? We will focus on that. It affects us obviously in a political way, in a social way, in an economic way, in a financial way, micro. But let's focus for the moment on the behavior, the stock market behavior. For us, for me, in a personal point of view, the stock market summarize all the different thoughts, belief, and expectations, anticipation of investors and also speculators, policy makers, decision makers about the future. What they are doing in the stock market, we are buying the future, we are buying the volatility. When we buy, when we participated, when we involve in these different stock markets, the only thing that we expected is our savings increase. That's the first reason of our investment behavior. Our savings increase in the future. So, whatever the financial market analysts, the corporate finance analysts, or still the economists analysts, all of us, we are screening, we are forecasting the present, the current events and the consequences of that for tomorrow. Okay? So let's see exactly what the investors today are taking account about what is the history. What is the history behind the events? That's the best way, or one way to understand the different factors, in this case, the geopolitical ones. Okay, what is the history behind the consequences of that? So, geopolitics. Once again, this is my research point of view. Okay, geopolitics is shaping up to be a big mover of markets in 2026. Over the previous quarter, we've seen alliances shift, new trade frictions, and ongoing conflict risk, all of which have once again influenced sentiment and prices. That's very important, the sentiment of market. The price is only the consequences of that. While markets have broadly remained resilient and posted strong gains overall, periods of volatility have been more frequent and remind investors that political uncertainty still matters. Last year's winners continue to shape today's landscape. AI stocks drove much of the gain in global markets, while gold benefited from demand for safe haven assets. So both delivered strong returns, but recent price swings highlight how quickly things can change. So, geopolitical risk affects markets by disrupting trade, supply chains, investor confidence. Conflicts, sanctions, and political instability can cause oil prices to spike, tech stocks to fall, and investors to shift money into safer assets like gold or government bonds. Markets don't just respond to headlines. They react when global tension changes, where money flows, and what companies can earn. I think that most people ignore sometimes geopolitics until it slumps into their portfolio. But it's not just headlines that matter, it's how military tensions, shifting alliances, or trade barriers directly affect what companies can actually earn. If we are not tracking how these moves reshape the playing field, you are not seeing the full picture. So risk warning. All investment carry risk, including potential capital loss. Economic fluctuation and market changes affects return. And more or less, according to the different statistics, 40–50% of investors underperform benchmarks. Diversification helps, but does not eliminate the risk. Invest wisely, and obviously try to consult your personal or professional financial advisor to better understand your different strategies, especially in our today complex stock markets. Because markets don't move from the fundamentals on earnings or economic data. They also markets react strongly to what's happening in the world. Political decisions, conflicts, global tensions, all of that move prices. Most of the time in unpredictable ways. For beginners, learning how political news shapes financial trends can make investing feel less confusing and more grounded in real-world events. So we need to understand, first of all, that geopolitical risk. What is that change that political situations around the world will affect markets? It covers everything from wars and sanctions to changes in leadership or international trade policies. What counts as geopolitical risk? Wars, military conflicts, events like Russia-Ukraine war, or still Israel and Gaza tensions don't just trigger humanitarian crises. They triple through oil prices, defense stocks, currency markets, and safe haven assets like gold. Right now, it's a very good investment. Why not? No? For example, the Ukraine, here in Europe, the Ukrainian war led to a spike in global wheat and energy prices due to a supply disruption from a key exporter. Also, we have the trade wars and tariffs. Look at the US-China trade war showed how tariff on steel, tech, agricultural goods could affect everything from commodity markets to global supply chains. Companies relying on imports or export often see earnings increase or reduce depending on how trade relationships evolve, as well as political instability or regime change. Certain leadership changes, mass protests or coups, Sri Lanka, Venezuela, Turkey, tend to weaken currencies, raise bond yields, and scare off foreign investors. These shifts often cause short-term outflows of capital until stability returns. So all of that, all this information, all these events, all this news bring uncertainty. And uncertainty causes quick reaction. When investors are not sure what's coming, they tend to pull back from riskier bets. Supply chains can break. Political trouble can stop the flow of key parts of materials, hurting company profits. Money move to safer places. During unrest, investors often shift funds to places they see as more stable. So all this happen at the same time around the world because economies are so linked. A decision made in one country can shake markets in many others. This makes geopolitics more important than ever for investors. So, products made across borders if one country blocks exports, obviously companies around the world can feel the impact. Nervous investors react together. A crisis in one part of the world can cause sell-off in another, even if they are not directly connected. All the firms work with all the international firms in a direct or indirectly way. So currency shifts hate trade and profit. Political news often changes currency values fast, which affects obviously companies that buy or sell overseas. So what is in this kind of events, in this kind of situation, what sectors often feel it first? But oil and energy. These prices jump quickly when there is unrest in major producing regions. Another sector, defense and security. These stocks often rise during global tension or after threats. Food and raw materials. Trade issues or wars can limit supplies and rise worldwide. So the market in the past show us exactly what happened. So just take a look at quickly what happened here in Europe in 2016, Brexit, all the different European indexes, and still the Asia and from North America too, drop. Okay, what was that feeling, the sentiment, the belief behind the UK quit the Europe? So that's even right now it's a big challenge for Europe and United Kingdom to face this Brexit. Okay, so the first reaction was that as uncertainty about what is next in a social, economic, and financial situation. Another one is the US and China conflict, this trade war, exactly the same. Once again, investors don't like, as savers, we don't like uncertainty. And this kind of fight and war between the two most important countries in the world create this different situation. Okay, the fears about tomorrow, the tariff, how they will increase. The uncertainty is we don't know. The difference between risk and uncertainty is the first. Risk, we can manage. Risk management. Uncertainty, we don't know. We can't manage uncertainty. Okay? That's why when we are learning and we want to manage to deal with the risk, we will use the science or another, we will use a probability law to forecast the future consequences of my decision made today. And the only manner to forecast is having a method, scientist method, in this case, our normal probability distribution. With the uncertainty, the situation is not possible. We cannot. It's impossible to make a decision. And today, every day, we have to make a decision in our world, especially our business role. So I think that my presentation went off.
Did you have like more slides, Doctor, to share?
Yes, let me share right now.
Of course, don't worry.
Just 2 seconds. It's coming.
Yeah, it's already showing. We can see, but we see all the slides, not in.
Okay.
Yes, now we see the presentation.
Great. Okay, so just another example. So in the last years, we have BlackRock, one of the most important financial institutions in the world, and they have created this risk indicator, so we can see how the difference political and geopolitical information affects the market. And once again, the difference between how to manage the risk and the uncertainty. Each time that we have the higher risk indicator is because the feeling of the investor is we don't know. And when we don't know, we don't make any decision. We wait till it's only possible to make one thanks to our different probabilities. Okay? That's the first highlight of in our recent years, okay, the creation of this risk indicator. Once again, risk indicator, you can visit, obviously, the BlackRock web page, and you will see the methodology they use to measure the risk. We can't face something if we don't know the value of something. If we wanted to buy something, I needed to know the price. But the price is only the result of a trade. First of all, I needed to know the value of the thing that I wanted to buy through the price, market price. So I need numbers. I need numbers to have an idea, benchmark about is expensive, is cheaper. What is cheaper? What is expensive? It's only because we have a number. We have a methodology to create the price of this thing. And here we put a number, an indicator, to the risk, the geopolitical risk. We needed to measure that because all the geopolitical factors are not a risk one or riskier than others one. So first, we need to understand exactly the methodology. When we have this kind of indicator, and when this indicator rises, it's because the risk is increasing. And when the indicator decreases, it's because the feeling of the investor is not safe. See? So that's the best or one of the very good reaction of the markets and universities and financial institutions. We react immediately. We know that investors need a number, need to measure this kind of events. What happens? Please give me a benchmark, a number. Is a lower risk or is a higher one? So visit please this website and you will see the methodology coming from obviously professors of the university. Once again, this is what happened in Brexit. That's illustration about how the uncertainty against the risk the market can manage. Okay, obviously everything started with the uncertainty feeling, and thanks to numbers, indicators, we will take the time to analyze the situation and to make some difference forecast situation for the future. According to that, the price will move. So, what is the first indicator? Fears. Fears. When we don't know things, when we don't have the idea or a close idea about how deeply is the uncertainty of things, these fears in the stock market is known as volatility. And here we have the VIX. This is the fear indicator of the market. Higher the fears of the market, and the opposite. Okay. And look at what happened from the last months. We see here the Standard & Poor indices, the DG and Nasdaq. Just from the beginning of the year, we have more than 10% of decrease. But this is something that gives us a little more information about the current situation. In average, once again, a number, in average, the volatility of stock markets is around 20%. So look at the difference between the green and red lines is to say us that, wow, today this difference geopolitical situation influence highly our sentiments, our forecast about the future. 28%, even I think that the only moment that we have this kind of volatility, this number was just before or during the COVID-19 period. So kind to compare, okay? Just at the beginning, in February, in March, or at the beginning of that COVID-19, nobody knew what the result of that. So once again, that's to give you more or less an idea of how important is the situation today. Okay, in March, look at what happened in January. We have a volatility around 14. The sea, the ocean was so calm. Okay, so for all the investor was the best beginning of the year, January, February, and then the fears came as a result of this geopolitical situation in the Middle East war. Okay, so that's what we have today in the market. So there is the fundamentals, obviously, earnings, strategies, the business model of companies, the different markets or the different products, the technology, the different kind of way to create value, social value, fundamental value, corporate value, environmental value, financial value, the social responsibility of firms, and so on. All these fundamentals drive stock prices. But today, thanks or because the high correlated markets, this globalization, what happens in a political way, in a geopolitical way, in one part of the world, affect the rest in a less or more fundamental situation. So each of us, we know what are the consequences right now, what has happened in the Middle East war. In North America, in South America, in Europe, in Asia, all the companies, all the regions, and all the countries, we are affected by what happened in this part of the world. Because this geopolitical event affect the businesses, affect directly companies, plus other kind of geopolitical situations as the US-China tariff deals and so on. Over the case is still what happened in Europe with the Russia and Ukrainian war also. So that's something that we needed to take in account every day. So we needed to create it and to understand these new indicators, the volatility index, or still what the Merrill Lynch indicators offer us, or Bank of America, or still the European Central Bank, or what Blackstone offer us as indicators. And the only manner to understand that, to make a wise selection of portfolio and diversification, is to understand, to learn how our sessions, the managerial sessions, helps investors, policymakers, CEOs, to make the optimal decision, especially in corporate finance and the financial markets. Obviously, around all these different decisions, we have the strategy, the marketing, especially the digital marketing, but we need now to understand exactly how firms create value nowadays. And all these different events affect the business models of firms and the manner how firms think about the creation value in the different kind of. That's something that we offer in our MBA program. Our MBA at the Bordeaux University, in the business school IAE, we have created a program with European and American professors that take in account all these different factors to understand the decisions in the financial markets and in the corporate finance world. So in finance, these two different components, corporate and markets, corporate finance and financial markets, are related, are separated, but at the same time related. So we take in account these different factors that affect the creation value models of firms, especially in our last 3-4 years. We have seen how the technology, the new technology, these new technology factors, but also the behavior of our policymakers shape the world, the economic world, and obviously this change in our economy, in our financial markets, will change our social life. So We need to take all of that. This is the ambition and what we offer in our program. So this program is taught obviously in English in our Bordeaux University. The master degree lasted 2 years in Europe, in France. Okay, so this is a 2 years master program. And thanks to our international relationships with our international partners, we created a fast track MBA, a double degree. So we share our program, our curriculum with the MBA of other international partners from Asia, North America, South America, and Europe. Okay? One of our first international partners is MBTU, which is a university in the United States, in Madrid, and in Guayaquil, Ecuador. We have another ones in Asia and also in Europe. So this double degree offer the opportunity to the students for these international partners to get another degree, the MBA, the local MBA, plus the MBA of University of Bordeaux. Bordeaux, the city of Bordeaux, that in my perspective, on my point of view, one of the most beautiful cities in Europe. So we are the west side of France with all, if you have here about Bordeaux, for many different things, okay, our beaches, our wine, our gastronomy, our heritage region. One of the things is the different charms that we have in Bordeaux. And among the charm that we have is the university. Okay, in a few years, we'll celebrate that 600 years. Yeah, we are an old lady. We are preparing, obviously, a big celebration for this anniversary. And also, each faculty on each program, we tried to take in account our heritage, but also the future, the role of our university as European university to participate, to create new citizens, to shape a new world. All the professors, the staff are coming from for the four corners of the world. Professors from Europe, from Asia, from North America, from South America too. So certainly it's a European university in France at Bordeaux city with international staff. This year, we had in our international MBA and in our international programs 38 different nationalities. According to the United Nations, we had in our floor, the second floor of our business school, 20% of the planet. Thus, provide with different cultures, different point of view, different perspective, different languages, that provide with the respect. We create the respect of classmates, respect of staff, professors, in summary, the respect of each other. We have students coming from Russia, Ukraine, Middle East, coming from Lebanon, people coming from South America, North America, people coming from Nepal, people coming from China, people coming from Taiwan, and again, China. And it's amazing to see how these future citizens respected each other. So we have the basis, the pedagogical and the scientist model in our financial program. It's an MBA that focuses on corporate finance, financial markets, managerial accounting, with the different others managerial skills, marketing strategy, organization behavior, human resources, and so on. But also, we created an atmosphere that each of us, we have our role, and we are one. All the classroom, we are one, and we try to understand that different perspective. That's that I wanted to share with you. Okay? This, thanks to this, through this situation, this geopolitical situation, bring opportunities in a business way, but also in a social way. So this brings us to Bordeaux University the opportunity to share our thoughts and to learn from our international partners. In this case, thank you very much to MBTU Madrid and Miami and Ecuador, the opportunity to share my thoughts, and now I'm here to share with your thoughts, your own thoughts. Thank you very much.
Thanks to you, Dr. Arbulu, for giving us this very important lecture. I think that it's quite the topic to analyze right now, because the current situation of the war is we are living with the consequences of the geopolitical decisions that are taken all throughout the war. So I think it is very important for us to know about this stuff. And actually, we have received a couple of questions internally, so I would love to share with you. It is also important, and thanks for the information that you have shared with us about the MBA degree in Bordeaux. It is very important to remember to all the people here that this is a program that is offered through the partnership, the academic partnership that, as Dr. Abulu said, MVTU Business School Madrid shares right now with Bordeaux University in France. So here I will also like to share the contact info for MVTU Business School, in order for all the people that are listening to us right now that can take contact and make contact with MVTU in Madrid, and also, of course, ask any questions that they might have regarding the program. This is a global opportunity, as Dr. Arvelu said. The importance of sharing experiences and different perspectives with people from all around the world is another very important factor to make a decision and study in a program like this. So basically, to start with the questions that we have received, I will love to ask you, Dr. Arvelu, if you may answer for us about the difference that you can highlight about how financial markets in America, Africa, Europe happens to manage the geopolitical risks that you have talked about. If maybe is there any difference you consider there are there any differences between how the American financial markets, the European financial markets, the African financial markets happen to manage these geopolitical risks that you just told us about?
In a quick answer is that each different stock markets, the stock market is an institution, it's an organization. Okay, so well-shaped the organization, better the manner they face the risk. Okay, so obviously the stock market efficient, as we say, the efficient stock market face and manage better the risk. If we compare the New York Stock Exchange, London, Paris, Frankfurt, still as others, they manage, thanks to the different professional who works inside these different markets. Okay? And obviously, the professional, better you are prepared, that is as everything in the life. Okay, better you are prepared, better you face the events. Okay? So I think that most of the time that the difference decision makers in these efficient stock markets are well prepared, but still, even today, we know that we are not well prepared, never, to face the information or the situations that created the behavior of policy decision makers. It's kind of amazing to see that in the past it was easier to make a decision in the market. Today is so complex. We have too many different evolution and too many different revolution. So we need to have all well professional, financial professional have to be well prepared. Then is the experience that give obviously that perhaps the good way to react, to act facing these problems. So
Yeah.
as other firm, what is the difference between the international firm and a small firm and a local small firm? It's just the people who work inside. That's it. What's the difference between a good team in sport? Is the players. So in the financial markets, it's the same. The players, the financial players, well prepared are, better are.
Yeah, yeah, sure, doctor, and of course the cultural factors maybe are also very important because, as you said before, the team, the people that make the decisions. Of course, we have cultural differences between our countries and our continent. So maybe that's also another factor that has to do with the way we manage these geopolitical risks and also make decisions from them. So another question I would like to know, maybe if you can share with us any insights about how do you think that companies anticipate and manage these financial risks, considering that we are now living in a context of increasing geopolitical uncertainty and also global instability. Maybe what are your insights about how the companies, especially the national companies, maybe not the transnational companies, but maybe national companies can deal with this global uncertainty?
They have to, or they are adapting. They adapt. They adapt to these different situations. So the key factor of resilience is the capacity of firms to adapt to the different situations, to find another logistics, to find other providers, to come back perhaps to different others, national or regional providers of different raw materials, products, and so on. For example, here in France, more and more French firms try to have to renew contacts with the local firms. Okay, and that's something that happens. If you see the first signs, the first decision of this tariff war, of this commercial economic war is American first. The only thing that they want is to create a strong market, American by American products. That's that all the countries are doing. England, Ireland, Poland, Spain, France. French people now, we wanted to buy French products. That's so the firms have to adapt. The time to get a little more new situation, because the world is changing, and we don't know. I don't know what is the end of this history. I don't know. The only thing is, I use all the different experiences to understand and to adapt and to get the right information from the right people to make perhaps a good decision.
Yeah, sure, doctor. That is very clear. I think that, of course, the people from each of our countries have to not only learn how to manage internal information or national information, but also to have a broad knowledge about what happens in the world. So maybe this kind of global information in our hands can help us to decide what to do within our own markets. So thank you so much, Doctor, for your answers. If I don't know if maybe any of the participants in this lecture has another questions that might want to ask to Dr. Arvulu. If not, of course, you can write your question in the chat of this webinar. But also, I would like to remind you all that we are of course offering more information about the MVA, the Master in Business Administration program by the Université of Bordeaux University in France. This is a very important opportunity for you to begin an official European degree, master's degree with our allied university in France. So let me remind you of this. Here you have all the contact info from our business school. So we are, of course, more than happy to answer your questions and doubts about this program. And of course, welcoming you to this academic opportunity that starts very soon this year. So it's very important for you to contact us as soon as possible so we can give you all the academic and of course financial information about this very important program. So saying that, I think that we're finishing this space, the boardroom sessions from MVTU Business School Madrid has made another very successful exercise now with Dr. Arvolu from the Université de Bordeaux, our close ally. Thank you so much, Doctor, for your time and for sharing with us the knowledge, your knowledge regarding financial markets and, of course, how to manage geopolitical risks. So thank you so much, Doctor. Thanks to all the people that have been in this webinar this evening from MVTU Business School Madrid. We send you a very, very warm regard, and also thank you very much for being part of our university as well. Good night, everyone.
Thank you very much, all of you, and please take care.
Take care, doctor. It's been a pleasure. Bye bye.
Bye
Good
bye.
night.